Good day, everyone. I want to thank you for taking time out of your day as we go over GILICO's top performing fixed annuities lines and bond income alternatives. My name is Tim Watts. I'm an annuity sales director over here at IAMS. Before we turn this over to Nate Self from GILICO, I do have some important information to share about who we are at IAMS and a quick highlight of why our agents love working with our team. We will have a few polls during the webinar, and if you have any questions, please do not hesitate to put them in the webinar questions tab. We'll make sure that they are answered for you today. If we don't get them today, we will definitely get you an email or a call afterwards, but our intent is to answer any questions that you do have today. First thing I want to highlight is our best-in-class customer service. This is a commitment that we live on every single day over here at IAMS. The first step to that is a live person answering your phone calls during business hours. That number again is 800-255-5055. Again, we're going to answer that call with a live person and always try to get to that call within 2 to 3 rings. Our new producer builders are for those of you who are new to us over here at IAMS. These bonuses are available to you based off of your production in your first 6 months or 180 days of contracting with us. We have several great levels that you can see. We've got incredible business building tools, personal perks, and even cash rewards if you'd like. If you'd like to know where you stand towards that new producer builder, or if you'd like to have a conversation about how to achieve the next level, definitely give myself or one of our other annuity or life sales directors a call. Moving on to another Business Builders program, let's talk about our Referred Producer program. We do have advisors on these calls every single time who've taken advantage of this program. Our business on the wholesale side of the industry is similar to yours in the field, in that one of the best leads we could ever obtain is a referral from one of our valued producers. This is why we want to make it worth your while when you refer someone over to us. The first thing we're going to do is get you a $50 thank you check. Now, where the continued real benefit comes in is as your referral writes business, you're going to get an override on that business. Now, this doesn't subtract anything from your referral, so it's a great way to refer those valued producers over to us and allow us to help work with them. Our leadership team cuts checks for thousands of dollars every single month, and we'd love to add you to that list. Below that is our marketing reimbursement program, which is our most popular program that we offer. For every $100,000 in fixed index premium, you get $100 in marketing reimbursement account. Why this is so popular and lucrative for our advisors is we truly do consider this to be your money. So we don't tell you when you have to spend it, tell you where you have to spend it, or have any limits or rules around this, other than when you spend money that's to help your practice with marketing, we're going to reimburse you for that. We also can use our in-house IAMS creative team to help you with those marketing solutions as well. They can help build websites, logos, all sorts of different activities. So if you are looking at that marketing reimbursement, definitely check out what IAMS Creative can do for you, in addition to those other marketing strategies. Back office support, this is another way we add value to your business. This is the core of IAMS and how Charles Hearing founded us over 37 years ago. We want to help the independent advisor work smarter, not harder. We are going to do this with great business building tools and resources. Of course, advanced case design assistance, life and annuity quotes is something that we can help you out with. We're going to make a commitment to get that back to you within 24 hours. If you are in a pinch, we can get those turned around within an hour or two, and we typically are in that hour or two kind of time range. So our back office is here to support you so you can stay in front of those clients. Submission to commission support is handled by our new business teams. We've got Mackenzie heading up the annuity side and Michelle on the life side. They've got fantastic teams who work tirelessly to help you get commissioned quicker. They'll scrub your apps, submit them on your behalf, do the administrative tracking, and get you updates on the cases as they come in. We do this to ensure you get commissioned as quickly as possible. This is a service that we provide to our valued producers and how we help you grow your business by keeping you in front of clients while our team handles the back office support for you. Firelight eApps, this is a single sign-on at IAMSinc.com. Technology is where the industry is going, and Firelight is a top-notch site streamlining the application process. Most of our carriers are on this eApp platform, so you can go onto one site, IAMSinc.com, to submit business. It's COVID-friendly, and some carriers are going to eApp only for their product lines, and or will offer extra commissions for utilizing that eApp platform. Make sure you talk to one of your sales directors before you submit business to see if you can earn more by submitting it eApp. Utilizing our Firelight platform accelerates the application process substantially. The eApp platform helps you submit business in good order the first time. This also reduces the processing time of your business and helps get you paid quicker. As I mentioned previously, this is a single sign-on at IAMSinc.com, as we've integrated our business with Firelight so you can have the most effective and efficient way to submit business. Just a few more slides here, and then we'll get this turned over to Nate. So I do appreciate everybody sticking with me here. We do have that full in-house creative team that I talked about earlier. They have a lot of items that are turnkey and available for you. We can simply impose your contact information and your business logos on it. Speaking of logos, agency solutions are an area that we specialize in, and if it's something that you haven't created a full customized brand for you and your agency, they can help out. This is going to assist you with your name recognition, which grows your natural market organically. We can get your logo designed and imposed on a business cards, brochures, stationery, plus a lot more. Lastly, what a lot of our agents are looking for are those digital marketing solutions. We can help you with websites, social media marketing, email marketing, and much more. The internet and social media sites are where the overwhelming majority of prospects go to for information. Making sure you're accessible and represented in those marketing lanes is beneficial to growing your business. Reach out to myself or one of our sales directors once this webinar concludes, and we can get the ball rolling for you with our IAMS Creative. Our website is a great tool for our producers to use, and another reason to work with us over here at IAMS. Once you're contracted, you'll have full access to everything you see on the slide, plus a lot more. If you haven't registered for the website, it's very simple to do. When we get done with this call, go and register on IAMSinc.com. If you'd like to take a look at a webinar, we did, Beth Rickless and I did a webinar about 4 weeks ago. You can go to our YouTube page, which is IAMS Inc. at YouTube. Search for website in the videos, and it'll be a great tutorial about all of those great features with our website there for you. We founded our IAMS Wealth 5 years ago now. What we've done is grow this division of IAMS very organically. We've helped advisors become IARs and pass the Series 65 at a very successful clip. Once we have you registered, we'll bring great value to your practice with an incredibly competitive fee structure for both you and your clientele. We have great technology and investment platforms, and this has been a major growth sector of our business, and assets under management could be a major growth sector for your business as well if you haven't already integrated it. We just hosted our 5th Life and Annuity Academy. These 2-day trainings are an excellent opportunity for our agents who are looking for new ways to grow their business. IAMS pays for all expenses on these academies and gives you an opportunity to network with our top producers. They'll go over marketing strategies as well as those top annuity and life insurance products. At this last academy, we had over 18 presenters, so there was a ton of value added on this one. With that being said, I want to go ahead and launch my first poll, and that would be, would you like some more information on the next Life and Annuity Academy? Again, these are all expenses paid. We're going to pay for your airfare, your hotel, as well as the training and putting you up while you're here. Add a ton of value. I've been to the last 3, and just the networking and everything that comes from these great events is very beneficial. Going to go ahead and close that poll. Thank you for the participation there. I really do appreciate that. With that being said, let's go ahead and get to the next slide here. We did just get back from our Park City, Utah trip this past August. We are in qualifications for Seaside Sanctuary, which that will end on December 31st. As soon as that ends, we'll begin qualifying for that next trip. If you have already been working with us over here at IAMS, definitely give us a buzz, see where you're at on qualifications for Seaside Sanctuary. If you haven't worked with us over here yet, we'd love to get you kick-started with this trip plus the next one that's coming up. Give myself or one of our annuity sales directors a call, and let's see if we can get some business going to get you qualified for that. All right, we are on LinkedIn and Facebook. If you haven't joined us there, definitely go ahead and log on and do that. Got one more poll here before I turn it over to Nate at GILICO, and that is, are you currently happy, 100% satisfied with your current IMO? Your IMO should be working hard for you. They should make your job easier, not harder, provide you with tools, resources, solutions, like you've hopefully seen from the presentation that I've done on this introductory here real quick. So I'll go ahead and give that poll just another quick moment or two. Would love a few more votes. If you're out there, go ahead and click on that button. All right, I'm going to go ahead and get you changed over, Nate. So let me close this poll, change this presenter. Nate, you should be live now, sir. The floor is yours. And I see your screen.
Does
You're
that
good
look
to go.
okay?
Yep,
Wonderful. Well, thank you for the introduction and all that great information and rewards that are forthcoming at IAMS. It sounds like a really exciting time, and I appreciate everybody for joining this morning on our last day of summer. My name's Nate Self. I'm with Guarantee Income Life, and IAMS is a great partner to us and has been for many years. This morning, I wanted to bring to the forefront the topic of rising interest rates, where we're currently at, and how it impacts your clients. And it's timely because yesterday there was a Fed decision. So we have a pretty good idea of where we'll be for the rest of the year and next year, and how that fits into the annuity and life space. And then I'll finish up by going through our product lineup. Our flagship index annuity is a good accumulation vehicle as a bond alternative, as well as for a guaranteed income stream. So over the past 40 years, up until 2020, interest rates have really been in a steady decline, with yields near all-time lows. The future role of this passive fixed income strategy and portfolios has certainly been tested, especially for your retirees or soon-to-be retirees. Now, over this period, people have invested in bonds, have been seeing incredible returns, with the 10-year Treasury peaking at 15%. Yeah, that's right, 15%. The 10-year Treasury was at in 1981 to below 1% in 2020 during the initial shock of the COVID pandemic. And all these great returns have formed a strong bias for retirees who want to reallocate large portions of their portfolio to bonds. However, given the current rate environment, the potential negative impact to retirement distribution plans that carry a large bond allocation is certainly concerning. Now, to put this in perspective, the 10-year Treasury, as illustrated on the graph on the slide, closed yesterday at 4.4%, which is the highest it has been since 2007. So 16 years, yesterday's close was a record high. Now, looking to the future, the Fed announced yesterday that they are going to hold the federal funds rate at 5.25% to 5.5% range for the time being. However, 12 out of the 19 Fed members projected that they will raise interest rates before the end of the year, as they continue to aim for that 2% inflation target and slow the economy down. And we're still at 3.7%. So still a little bit of a ways to go for the Fed to work to get to that 2% target. And as they raise these interest rates for the end of 2023, the value of your client's bond portfolio deteriorate. This is a harsh reality that makes education around the current bond market crisis, as well as identifying alternatives for passive fixed income, critical in the financial planning process. Now let's take a closer look here at the real impact of rising interest rates. So traditionally, fixed income investments have the implication of bringing safety and stability to a client's portfolio. However, when interest rates rise, these investments come with risk. And as we discussed earlier, as interest rates go up, bond values generally go down. This could mean trouble for clients counting on bond investments to be reliable retirement income. So let's consider a value of $100,000 investment in a bond and how it can be affected by interest rate increases. On the screen, you can see the higher the interest rate increase and the longer the duration, the more the severe the decline of the value of that bond. For the starkest case on the chart, a 30-year treasury were to rise 3%, a $100,000 initial investment would have lost over 40% in present value. This is really not too far off to where we find ourselves in. The 30-year treasury rate hit 1.25% on March 2nd in 2020 as investors flocked to safety. And just over 3 years later, we're well above that value, above 4%. A greater than 2% increase would have decreased your client's $100,000 investment by over 30%. So don't let these increasing interest rates derail your client's retirement plans. And as we'll discuss shortly, there are other investment vehicles to help you provide principal protection, growth opportunities, and guaranteed income streams to help them avoid some of the negative effects of the current market conditions. So I now want to talk about a topic outside of just individual bonds or fixed income, which is the current problem with the common retiree balance portfolio. I've read countless articles from fellow financial advisors and investment experts for their view on the traditional 60-40 equity bond portfolio, and I personally haven't had a strong opinion on this balanced portfolio until 2020, once rates started to rise. One interesting fact about the 60-40 portfolio theory is it became popularized first in the 1950s by Vanguard's founder, John Bogle, and it's been nearly unchanged for 70 years. Now, many advisors like yourself have been trained to look at the 60-40 as a benchmark for early in retirees' journey. Now, with a low and rising interest rate environment, we really need to get more creative with how we look at their portfolio. So several existing market factors create issues for this type of portfolio here in 2023. Number one, we're still in a low or relatively low, yet rising interest rate environment. And as we discussed previously, as we hit record lows and they begin to rise, the bond's value deteriorates. Number two is inflation. We're still at 3.7% for inflation, and within fixed income, outpacing inflation over the past decade has been really easy for investors, but high valuations of stocks and low yields on bonds means like the next decade will be much more challenging to protect against real after inflation value of their investments. In addition, stocks and bonds tend to be tightly correlated and falling in a high inflationary environment. Number three is a tighter monetary policy. The Fed's aggressive monetary policy of tightening has the likelihood of hurting U.S. growth, with several Wall Street banks warning of an increased chance of recession here in 2024, 2025. And the Fed has already raised interest rates 5.25% in 18 months, and they could continue to rise, as we discussed. I wanted to bring on the screen a chart that shows the magnitude of how fast the Federal Reserve is raising rates. The amount is certainly important, but how quick they have raised rates is even more alarming. The green dotted line is the current rate at which we are raising rates. We went from 0 to 5.25, as I mentioned, in 18 months, which is the fastest the Fed has raised rates in the past 40 years. And given these factors, the heavier weight in bonds, it may not make sense for your clients with how fast they're raising rates. The problem forces us to rethink our basic allocation principles. And in fact, research done by JP Morgan Asset Management revealed that allocating just 30% of a client's portfolio to alternatives, including insurance vehicles, can substantially increase annual returns while simultaneously strengthening portfolio stability while decreasing risk. So what's the solution? And thankfully, GILICO has those solutions for you. We were founded in 1926 and have been helping generations financially prepare for nearly a century. In 2016, we became a Kuvare family of companies, and here at GILICO, we have a real family feel that really cares about all of our IMO partners. We only do our distribution through IMOs, and that just leads to a better relationship with our agents and our partners. We're located down in Baton Rouge, Louisiana. We have an office here in Des Moines where I'm located. We're really growing out our business development teams, our IT and actuarial teams. And our overall purpose is to deliver value-oriented retirement solutions to the middle market and a commitment to long-term sustainable growth strategy with a limited number of strategic partners. And since we were acquired in 2016, we've grown our premium from $45 million to $1.25 billion last year. And this year, we're on pace to do well over $2 billion in premium. So we're one of the fastest growing annuity carriers in the marketplace. And ultimately, across the Kuvare family of companies, everyone is A- rated, and we have over $33 billion in assets in aggregate. I mentioned we are A-. We're approved in 46 out of 50 states. We do all cross-border sales. We've had 16 consecutive quarters of premium income and asset growth, and the sky is the limit for the growth of this firm. It's really exciting times. Now, I wanted to go through our Wealth Choice, which is a great bond alternative in multiple ways. But when we built the product in 2019, we wanted to build something that would allow our agents to get more yeses than nos, be able to help more people. And what I mean by that is we wanted to take out a lot of the barriers or objections that you receive when you're typically talking about index annuities. So we really streamlined the features and benefits. It's not complex whatsoever. It's one of the easiest products to understand. There's no roll-ups, no charges for joint income. There's no banding on the premium amounts. It's just a very simple product. Full liquidity right up front. You get 10% of the account value right away and each year thereafter. And the most cost that it could bring is 75 basis points. So a lot of the objections you'll be able to overcome with our Wealth Choice. So power up your clients' retirement savings with Wealth Choice, and it comes in 3 different versions, a 5, a 7, and a 10-year option. And the 10-year does have a 5% optional cash bonus. We issue these contracts all the way through age 90 to help as many clients as you possibly can. We do have a built-in 110% death benefit feature, free of charge. All they need to do is simply have the beneficiary elect a period certain payout of 5 years or longer, and that account value will be paid for 110% of the value. And then the income rider is available on the 7 and 10-year versions through the age of 80. Our products, to keep it easy for you to explain and make more sales, help more folks, is 3 S&P strategies, a fixed rate, and then a multi-asset volatility control index with Horizon. We are known for having consistently high rates. We've had these top of market rates since May 1st. The popular strategies right now are that 5.25% fixed rate. That 5.25% fixed rate is valid on all of them to keep it easy. So the 5, the 7, the 10, and the bonus version all at 5.25% as the year 1 rate. And then our S&P annual point-to-point cap, that is our second most utilized strategy, ranging from 10.75 on our bonus version to 12% on our 10-year non-bonus version. So very simple strategies to know and explain. The other thing that's extremely important is what are our guaranteed minimums or renewal history. That's another type of question or objection that you'll receive. We just raised our minimum renewal on our fixed account. That's on all versions. So that 5.25% fixed rate is a year 1 rate, but the worst it can renew at in year 2 is 2.65%, which is really, really nice to have as a safety net if you ever need it down the road. We've also had strong renewal rate history. We price our products with a constant option budget, which just leads to a higher likelihood of having good renewals. And so far, we've not dropped the renewal rate on a client once with any of our index strategies. So if that's important to you, or if you had clients concerned or asking questions about renewals, we would be a good carrier to look at. Now, I wanted to illustrate what that fixed account can do. It's extremely powerful and is a great MYGA alternative. So here on the screen, we have that 5% premium bonus on our Wealth Choice paired with the 5.25% fixed rate. And you can see in the first year, the client earns 10.51% to their account value. That is guaranteed in the first year. Then in year 2, worst case scenario, it drops to 2.65%, bringing the total yield for 2 years to 13.44%. That's better than any MYGA you can get, even on a 10-year chassis. And then you have the index strategies to reallocate to, knowing that we have perfect renewal history. Now, one strategy that has definitely gained in popularity because of how high these rates have gone is just taking free withdrawals. If you can guarantee your client 10.5% year 1, just take the gains up to those gains. You don't have to necessarily take the full 10%, but you could structure your own income strategy without having any fees associated with the account and just go for an accumulation play while taking those free withdrawals. So our number one sales strategy right now is to provide that tax-deferred growth, high guarantee in the first year with a good renewal, and then have the ability to reallocate in year 2 and beyond with strong S&P caps in the double digits, knowing that we have strong renewal history. Now, we do have that optional income rider. It is 75 basis points on the account value. We don't have a benefit base, so really easy to explain the cost of the rider. You can add a spouse at no additional charge. We would just base that payout on the younger spouse's age. You can remove the rider at any time, say they no longer need the income. You're not going to forfeit strong accumulation down the road. We truly built the product to be hybrid in nature, to provide maximum flexibility, low cost. But as I mentioned, we're seeing a lot more people just take those free withdrawals to remove interest rate risk, and you still have the great accumulation. And more people that really don't need more than 10% out of their investment vehicle each and every year. And we do have some living benefits available on the product. We have terminal illness that's included on all issue ages, as well as a nursing home waiver. If they've been confined to a nursing home for 30 days, they would have full access to their account value, and there would be no MVA or surrender charge associated to the account at that time. Now, we do have a commission enhancement program going on for this year. It is the lowest enhancement program to hit in the industry at $1 million. Once you do hit $1 million, that's all of your Wealth Choice business. We'll pay you a minimum of a $5,000 check directly from GILICO for your loyalty to us. At $2 million, at 75 basis point payout would be paid to you. That's retroactive on all your business to day one. And at $3 million, 1% or a minimum of a $30,000 check on top of your normal street commissions to be paid to you. So it's a really great calendar year program. We'll likely have it again next year. And we've had really good feedback from our advisors who are brand new to us. They really enjoy that $1 million target to hit. We still have 3.5 months left of the year to hit that. So with that, Tim, I really appreciate the time this morning and your attention, everybody. I do have my cell phone number on the screen here. You're more than welcome to call or text me. My email, if you have questions on the product or carrier or need an illustration, I'm happy to help you.
Right on. Thank you, Nate. Appreciate everybody hopping on today. I do have one last poll question, and that is, are you ready to get contracted with GILICO, or do you have any questions that you'd like answered? So I've got that going on here. If anybody does have any questions, you got about 20, 30 seconds here to toss those into the questions tab, and we'll get those answered. Nate, I really do appreciate you hopping on here today. Some great stuff on that bond income alternative. Really good charts and graphs there. I didn't realize that the Fed had raised the rates as fast as it did. That was a huge learning for me here today. So thank you for that education.
My pleasure. Thanks so much, everybody, for joining, and I hope you have a great rest of your day.
Right on, everybody. Have a great one. Talk to you soon. Bye now.